Hi, I'm Brien Lundin, and I am at the Metals Investor Forum in Vancouver. I have the great pleasure to talk to a longtime friend of mine, David Wolfin, CEO of Avino Silver and Gold. And Avino, David, has been in and out of the gold newsletter portfolio many times over really decades. And almost always we've gotten it back in the portfolio at a really good time that's made a lot of money for our readers. And the reason why I recently got it back into the portfolio is because I think we're at the cusp of a great silver market and at the cusp of great things happening for Avino. We got in just in time because Avino had some major production increases this year, surprise increases, or at least exceeded expectations. But before I get into that, we're going to get into a big gold and silver market right now. And the best way to play a gold bull market is with silver, which offers us leverage to gold, and then silver companies that offer leverage to silver. You can then put leverage on top of leverage. And as we know, the silver plays, especially those that can benefit directly from higher silver prices because they're producing silver, are the ones that are the real rocket ships in this kind of an environment. So all that said, let's talk first off about the good surprise to the market you just delivered by beating production expectations this year.
Yeah, 2.6 million ounces of silver equivalent. We were expecting to do 2.2 to 2.4, so we exceeded our expectations there. We're planning to do 2.8 to 3.2 this year, but we have a 5-year plan. We've got 3 key assets: the Avino Mine, which is producing, La Preciosa, which we acquired from Coeur last March, and the oxide tailings resource. These 3 assets are going to drive our 5-year growth plan to become an intermediate producer.
Yeah, and that's, again, one of the key reasons why I added Avino to our portfolio is I saw, and we had a discussion last year, about what was coming up on that production ramp up. And it absolutely goes really steeply because you have at least 3 areas that are going to contribute significantly to that production. Let's talk about the first 2 that I think are exciting, but not merely exciting as La Preciosa. Let's talk about the Avino Mine. What advantages are you having there in this mine that's been producing for decades? And it's just, an iconic mine in the history of silver mining.
Well, we've been drilling below the bottom of the developed mine, level 17. We've extended the mineralized zone by 300 meters. So that's almost doubling the down dip extension. It's about 800 meters from surface. So we're really thrilled about that. We've got a brand new resource estimate coming out in the next few weeks. People should pay attention to that, because currently we have 300 million ounces of leverage to silver and growing. So we're really excited about what's coming out in the next few weeks.
That's great. As a producer, production's wonderful, but people like to see those increases in resources. They like to see drill results, et cetera. Amazing to me that the Avino Mine, after producing for so long, has so much more to offer. And
it was never drilled by our partners. They were a private family. It was such a big vein system. They had 1 or 2 years blocked out ahead of the mine, and that was it. A typical private Mexican family way.
The stereotypical Mexican silver mine. You just want to see what's ahead of you. That's all that matters.
And we brought in structural geologists because now we control the district. So now we're looking at the plumbing system there and what the ultimate potential could be there. We don't know. I mean, it's been broken up, the ownership over the years. And so now we're looking at it as one package, and we're brought in an ex-Newmont structural geologist, ex-Kinross, and they're helping us try to figure it all out, because the Avino system has signs of a porphyry. It's not a porphyry, it's a porphyry style, but we don't know what's below at depth. There may be more mines below because porphyries tend to stack.
So years and years of decades of production proceeding and probably decades more to go. One of the other 2 areas of production increase, the oxide tailings project. Tell us about that.
So when we closed the mine in 2020, we kept it closed to dry it out so we could drill it, because it was too dangerous to put a drill rig on top. So we completed 150 holes. All that material is been metallurgically tested and we're commissioning a pre-feasibility study this year. So we could potentially have reserves by the end of this year. That's the one sort of key ingredient that we didn't have for the institutional or banks for getting coverage from them. And so we'll check that box by the end of the year. We're thrilled about it. It's going to be a big operation. It may double the size of our operation.
Really?
Yeah, we're looking at 2 to 2,500 tons per day, dynamic leaching. And so the cost of that is about $7 per ounce.
Yeah, I was about to say a tailings project is going to be just dirt cheap, literally dirt cheap.
It's going to pull our all-in sustaining down. Right now we're around 17, but over the next 5 years we get between 10 and 12.
So you're going to gain from bottom line production and margin expansion.
Yes.
Okay, so that's two exciting areas. Yep. Now let's talk about the big gun here, the La Preciosa, where you bought it from Cora last year. They spent over $300 million to buy it. They had a feasibility study on it, or was it feasibility? Or feasibility study with $350 million of CapEx to produce. You will buy it, not counting contingent royalties, under $40 million.
Yeah.
And it'll essentially, the initial development will pay for itself.
Yeah, we're going to high grade mine it. There's 50,000 tons of ore sitting on the surface from back in the 80s. There was an exploration drift put in. So that's going to help fund the initial startup costs.
And this is important because we're talking about ore sitting on the surface.
Yeah.
You have a mill.
Yeah, with 4 independent circuits and one is idle, ready to go. We've rehabbed it. It's ready to receive this ore. The only thing we're waiting on is an agreement with the Avino group. So we're in the final stages. Our lawyers are with their lawyers. We're hoping in the next few weeks to have that in place and then apply for permits for the decline ramp and the portal. But we can start trucking that ore as soon as we have an agreement.
So that's cash flow right there.
Yeah, we estimate between $4 and $6 million is just sitting there on surface.
Wow. Now let's talk about the potential, because when you bought it, I was thinking that we were talking something really years down the road before it would start impacting production. But you're talking this year.
By the end of this year, because the decline will go in and we'll get to level 1, what we're calling, within a few months. It's not that far from the surface. The vein comes right to the surface. So we're going to ramp down, but we're going to put in 5 levels. And then what's going to happen over the next 5 years, we're going to ramp over to Abundancia, put in levels there, ramp over to Martha. So eventually we'll be able to pull 500 tons per working face and feed a larger mill. So we're thinking of an expansion in the Avino mill within the next 5 years.
Yeah, and that's a key point, because I'm looking at all of this. I'm saying, well, you have some significant impact this year on production. You grew it this year, you're going to grow it next year, in 2023. But we're talking about a 5-year plan that, if you look at the materials online, you can see a ramp up in production. That is something I think is going to really benefit shareholders. And again, we're in an environment where we're with a rising silver price. And it's not like this is a new venture. This is a company that's been around for decades.
55 years.
55 years. Very well managed. Let's talk about that to some extent. People tend to gloss over that. You do well in the community. You are a mainstay of your community.
Definitely.
In Mexico.
100% Mexican labor force, right up to our chief operating officer, who worked for Lewisman and Hecla and a few other large companies down there. He got his degree from Colorado School of Mines. So first-class operation, low labor turnover because the mine is in the area where there's community. There's 20 to 30,000 people within a 20-kilometer radius. We won an ESG award from the federal government there. And Samsung's donated 150 Galaxy tablets, which we're spreading out in the schools to create ambassadors for the company and train the next generation of miners.
Well, a lot of people, myself included, tend to gloss over ESG, but it is very important to do the right thing in the community. It benefits the bottom line and it prevents problems coming up. Again, David, thank you for being with us today. This is one of the top silver plays, one of our top recommendations in Gold Newsletter, because again, we are in a gold bull market. Silver will leverage that. The top silver producers will benefit from the rises in the silver price immediately. And you have all of that going for you with Avino, but you also have a production ramp up over the next months and over the next years that is quite considerable and will flow right to the bottom line. David, thank you so much.
Thank you very much.